Hello everyone, good day and welcome back to my YouTube channel at Illumination Hub NG. Don't forget to subscribe to the YouTube channel and also click on the notification bell so that you can be notified whenever I drop any new video. So today we're going to be looking at the end of the year adjustments. So we're going to look at what end of the year adjustment is all about. We're also going to examine the various types of adjustments, end of the year adjustments, and also we're going to look at the how to prepare the various adjustments, and also how to determine the various transactions that are needed to be adjusted at the end of the year. And we're going to do some workings in this video. Now, what do we mean by end of the year adjustment? Okay, so end of the year adjustments are basically corrections or amendments that are being made at the end of the financial year. These are just additional information or notes that are relevant to the accounts presented in the trial balance. Since we all know that trial balance is a list of schedule of all debit and credit balances that are extracted from the ledger. So there are some items that are not captured on the trial balance, but they are outside of the trial balance. That is, they are below the trial balance. So what we are simply saying is that this additional information are also quite relevant, and they are also referred to as closing entries that are made in the books of accounts at the end of the financial period in order to match the company's expenses with its revenue. Okay, and like I said earlier, they are represented as additional information in the trial balance. So let me just show you a format. Now we know that the trial balance, this is how the trial balance looks like. Okay, so whenever we have this format as presented here on the trial balance, okay, so whenever we have this, for example, we have capital, we have debtors, creditors, land and buildings, we have other expenses. Okay, so we know that all assets, we're going to debit all assets, we credit all liabilities, we debit expenses, we credit income, we credit capital and others. Okay, so the information that is posted under the trial balance as shown in the records are what we call end of the year adjustments. So let us move on. What are those end of the year adjustments? So there are various end of the year types of end of the year adjustments, okay, that we can come across, most especially in the additional information. We have the closing stock. We also have accruals and prepayments, expenses, depreciation of assets. We have drawings. We have accumulated accruals and prepayments for income. We also have provisions for bad debts and doubtful debts. Okay, and we also have provision for discounts. So we also have that also present on debtors as well as on creditors. Okay, so let us take them one by one. So when we talk about closing stock, for example, the closing stock, also known as stock at the end, okay, always appear in the additional information. So this closing stock must be treated twice, because any information that are available on additional information simply means they have not complied with the double entry principle. So what we're going to do is that the closing stock will be treated twice. That is, we are going to recognize it in the income statement. In the income statement, then we're going to post it to the statement of financial position or balance sheet. Okay, balance sheet. Okay. So we also have the accruals and prepaid expenses. Now, for accruals and prepayments, accruals are expenses owing. Okay, that is which an individual has derived benefits from the expense but has not made any payment. Okay, in this case, we're going to recognize accrual expenses in the income statement as an expense which we're going to add it back to the expense okay, in the income statement and record. So we're going to recognize as well as current liabilities. Okay, so that's what that for accrued expenses. For prepayments, so prepaid expense means that one has paid in advance, okay, for an expenses incurred, but the individual organization has not derived any benefit from the payments made for the expenses. For example, assuming that we have rent, okay, we paid rent in advance, okay, we get to what rent in the income statement, we're going to what less prepayment in rent, okay, prepayment, okay, we're going to take off the prepayment, so we're going to be left with the balance in the income statement. Then what do we do in the balance sheet? In the balance sheet, we're going to what? We're going to recognize as what as current assets. Okay, that's that on that. So for depreciation, let me just take that here. For depreciation, this is the reduction in the value of an asset over its useful life. That is, the asset will continue to lose value due to so many reasons like technological advancement, obsoleteness, usage, time, and other factors. Okay, so depreciation is what you can also be regarded as what the wear and tear of assets. Okay, so depreciation will be regarded as what as an expense which you're going to what deduct from the fees as any fees assets minus depreciation. Okay, in the income statement or P&L. Then the depreciation will now be carried over. This will be just in the this is in the balance sheet. Okay, so we're going to deduct the fixed assets and depreciation. We're going to give us what the net book value of the asset, okay, and in the income statement we're going to have the depreciation completed. Okay, depreciation in the P&L account. Okay, for example, if we have land and building, okay, land and building of 100,000 and depreciation is 10%. Okay, it's because of 10%. So 10% of 100,000 will give us 10,000. Okay, give us 10,000. So at the end of the day, the 10,000 naira will recognize in the income statement, and it will be deducted from the fixed assets or land and building. Okay, in the balance sheet.